Good evening, this is Ryan Malley for SharePlanner.com. Today is September 22nd, 2010. It's been about a week since I did the last video, and the complexion of the market has totally changed. We've gone from what I feel was a bearish market for the most part of this year since April or so to finally a bullish breakout with the completion of an inverse head and shoulders pattern that I've been talking about for, a good 2-3 months here. So let's go over a few things that's made this a bullish market. First, the inverse head and shoulders pattern. I've diagrammed it many times before, even yesterday I believe, where I drew it out and showed you where we confirmed the chart pattern. In any case, you got the left shoulder, the head, right shoulder. Now, once that's formed, the most important part is this neckline. You got a very horizontal neckline here, which is very textbook-like. And for about 4 or 5 days or so, we struggled to break through this 1130 level. And if you were reading my trading plans, you knew that I was very, very focused on this. I had a number of short positions. I covered them all once we closed above it, which would have been on Monday when we had this large candle rally here. In any case, 1131 was the mark. We confirmed it. That made me automatically bullish on this market. I think we're probably going to go see a test of those April highs over here. But I'm not going to jump on board until we get a few more pullbacks like we've seen today. These are very bullish pullbacks in the sense that they were very controlled. There was no panic. So a few more days of those, maybe even starting tomorrow, I might start adding a position or two to the portfolio. I was thinking about it today. I just held off on it. I want to see what tomorrow brings first. Still pretty overbought. We're slowly working off those conditions, but we could use a few more days of like what we had today. The other thing that really caught my eye is this: when you look at it from a much larger perspective, this downward channel and the upper line of the downward channel was tested twice before and it held, and we hit it a few times without breaking through it, and then finally broke through that. That was back on, that was back on September 9th where we broke, September 10th, where we broke through it, and we rallied there on. So that was one. The second one was when we broke through this 200-day moving average, which generally measures the long-term health of the markets. Broke through that with relative ease, and since then we've been rallying pretty strong. So that's the S&P. Now let's let's look at another chart here. This is the Nasdaq. I mentioned before the impressive rally that it had been on, where it essentially rallied about 13 out of 14 days straight without as much of a pullback as there just wasn't no pullback. It was pretty incredible. However, you can see this trend here that we had been on during that time, and we finally broke it today, which is a good sign. It means it's probably trying to put in a lower high or a higher low here, which will give us something to trade off of. Tomorrow could be that day where it puts in that bottom before resuming the upward trend. I'm not sure, but for sure we're going to see probably a little bit of a pullback right here on the S&P. I'm not sure. That could be about 20 or 30 points. Hopefully, I mean, I would love it if it could pull back about 2 or 3% and give us some decent entries here. One position in the portfolio is TICC. This sucker has just been dominant for all of 2009 and all of 2010. I bought this at 877. Let me make this trend line a little bit better here. 877, which was about right around here. And ever since then, it's just been on a solid uptrend, continuing what it's been doing for the last 2 years. So I got about a stop loss at 904 on that, and we'll continue to move it upwards as necessary. Let's look at the T2108. This is the Worden chart of how the market is in terms of oversold, overbought. Still very much up there in terms of being overbought. We're starting to work off those conditions slowly but surely, but we'll have to see how that unfolds in the days ahead. I don't have any other positions in the portfolio, but I did add a couple of new positions to the bearish charts pattern, which is a new feature, or my watch list basically, that I add stocks and take stocks off of fairly regularly. I try to visit that a few times a week. One today was ACI, which has a very nice trend since bottoming back in late 2008. But as you can see, this trend, though it's not extremely steep when you're looking at it from a long-term perspective, I mean, you've got a pretty decent jump in gains where it's gone up about 150% off of its lows. This one here probably could stand to benefit a bit of a pullback before jumping in there, but I want you guys to keep an eye on that trend pattern, because if we do pull back to that level, that is definitely something worth putting a position on with. Harvest Natural Resources, HNR. That one has a cup and handle pattern going, as you can see right here. It's a very small one, but still very tradable nonetheless. I mean, it jumped about 8% today, which makes it hard to get in on a daylight today when it's moving that fast. But as you can see here, you have the neckline of that cup and handle pattern here, as you can see, and it broke right through it when it was about 4% up on the day. How you would want to play that is basically wait for a pullback and then jump in. I wouldn't try to go in on tomorrow or anything like that when the market opens, because you're probably limiting your reward opportunity here and increasing your risk quite handsomely. The other one is THM. That is International Tower Hill Mines. Pull it up here for you. And what you have here is a stock that's been trading in this downward channel for quite some time. I mean, you go back to April, which was also the S&P market highs, bouncing consistently 1, 2, 3, 4, and then just a plethora of days right there at the very end off of this upper trend line, and bounce numerous times, 1, 2, 3, 4 times off the bottom channel line. Ignore this line right here, but what we have here is we have a break of the trend and a potential to see a pretty significant move upwards. I mean, you could definitely see a challenge of the April highs in this stock as well. I think this is right here, 730 level is going to be some resistance for it, but nothing that says it can't go back up to that 770 level, which would be a huge profit opportunity there. So keep your eye on that one as well. That could very well be one of the stocks that I jump in tomorrow if this market pulls back enough. Life Partners, LPHI. It doesn't matter what kind of market it is, that stock always seems to pop up on the bearish or bullish side. Today had a very solid day despite the market being down as well, so I wouldn't be jumping in, especially with the rally it has had over the last 3 days, going from about 1650 all the way up to 1786. This is probably not the best inverse head and shoulders pattern you'll ever see. This would be the left shoulder, the head, and then you sort of got a flattened out right shoulder. If you were to draw the trend line for it, though, probably looks something like that, or the neckline for that pattern, which broke out on Monday and actually tested it today. I'm not sure if that's a legitimate price that was actually sold at there, but as far as the chart is concerned, it does show that as being a test of the trend line today. So you could have had that today if you were following it. So that is a few charts to keep an eye on, and for now, that is all the video that I'm gonna of a broadcast that I'm gonna do. I hope you guys all have a great evening, get some rest, and see you tomorrow.